Hi there, traders. This is Brad Gilbert with today's trading action. All right, a little bit earlier than usual. I'm just going to hit the road. So just to give you a bit of an update. Now today we've got some key things coming out. Like we do have the Eurozone CPI estimate. Okay, it's worth having a look at. Non-farm payrolls, right, will be the main show. And then later after that, you've got the ISM manufacturing numbers. If the ISM manufacturing lines up with the payrolls, you're going to get a sort of double whammy move on the major currencies. Now, just a sort of bit of a heads up, right? I was going to say like dancing with the devil, right? Non-farm payrolls is explosive. There's about six numbers. The two key numbers are the payrolls number, and then you've got the unemployment rate. Okay, so these two here, right? So 110 is the forecast, the range 0 to 176, and the unemployment rate is expected at 4.2. That's a bit tighter, right? 4 to 4.3. Now, just on this, right? The smart trade is like a ricochet. If we got really weak US numbers, you're going to see a bit of chaos. But some of these instruments do have great trend lines. Euro's trend line is close to the market. That could work for a weak US number. The thing is, you know what? If we get stronger numbers, right? It's we don't really have entry levels on the downside, right? You just got to out market. The markets will gap. It'll be loose as a goose, right? But in saying that, the trend, short-term trend right at the moment is down, right? So dollar strength, that is the best trade to be putting on. But this is the situation sometimes. We don't have trend lines in some of these situations. So the best trade, strong numbers, hard entry. Now, if we get weak numbers, euro looks great. Like you got 100 points before you hit the sterling resistance there. Aussie's about 50 points. That could be in play. You're looking for things that are about 30, 40 points away. Dollar Swiss, right? To me, if we get weaker numbers, dollar Swiss and euro are the two ones that I would be focusing on very closely, right? So just think about that before you sort of rush in, and just use the signals for some sort of direction. They are starting to come back into play, right? You saw about a day ago where there was a huge amount of uncertainty. Well, everything's calmed down and the majors are coming back into the groove, right? Dollar yen at the moment, bullish, but we're getting sell zone signals. That is a mismatch, right? So just be patient, look for the opportunities and take them when you can, right? There is still sort of cash coming back into the market, and the signals tell you that it's safe to come out and play again, right? So just keep an eye on that as you go through the course of the day. Once we get through the Asian session, I think it'll be pretty quiet with the non-farm payrolls. It usually is. Market sort of just goes into hibernation and then it goes crazy when it comes out. All right, guys, be smart with your capital. Look for the opportunity. Sometimes, right, when you're trading the non-farm payrolls or something like this, we're not trying to find the most aggressive trade. We're trying to find the easiest trade, right? That's what you got to think of. And sometimes if you go down through the live signals, you'll probably find a lot of crosses that do have an easy trade, right? Take the US dollar out of it. It's going to be a bit easier for some traders. All right, guys, have a good one. All the best. Cheerio.